Hey, hi. So today we just want to have a recap on what's going on in the market for the last couple of weeks. As you can see, market has actually corrected, especially the S&P 500 stocks. Luckily, with especially the Dow Jones stocks, while the Nasdaq are still holding up quite all right. The Russell stocks also actually went down, which consists of the small and mid cap stocks. Currently, basically, the statistics on the consumer demand has actually softened, and with the student loans repayment coming back online in October this month, also may affect consumer spending powers looking ahead, because it was the consumer student loans was actually suspended during the COVID, and until recently it has been lifted again for students to do their repayments. So generally, as you can see, consumer spending consists of about 70% of the GDP of US. So a softening of that, possibly softening of the continuation of the softening of the demand, may affect companies' quarterly profits and all that. So you can see even consumer discretionary companies like from retails like Target, Walmart, even Coca-Cola as well has gone down as well in terms of their stock prices corrected by about 10%. It also makes all these value companies, value stocks, which have, let's say, previously 4-5% dividends, to have maybe about increase their dividend yield because of the stock price going down. So other things that you might look at is the input cost, which is the oil. Oil actually has gone up and touching around $90, plus the fact that the US crude oil reserve has actually dropped as well from 600 million barrels to around 351. So this is actually making things a little bit difficult, especially the OPEC consists of Russia and the Arabs, where they decided to cut oil production, and plus this US stock reserve going down as well, which they need to buy to increase their stockpile. So, and companies will also be affected by this high input costs as well. And then plus the first point that I was making earlier on the slower consumer demand and inflationary raw material prices, input costs. A deflation actually looks very likely for the US, which is a similar story to what China experienced a couple of months ago, where they had a deflation. Deflation means whereby cost of producing something is high, at the same time the demand is low, so there's no pricing power. So the trick to this right now is it's good to do a review of your stock portfolio, and to see whether the companies that you're looking at has a moat. Moat is very important. Companies that has a moat will still have a good pricing power despite inflationary input costs caused by oil and other wage spiral and all that. So they will still can still sustain a good revenue, consistent revenue. And if you find certain companies, like I've looked at PayPal and all that, they are in a very crowded space with many competitors. Likewise for video streaming companies like Paramount and all that, they are also in a very crowded space, not really a monopoly type of company that has a moat. So yeah, do take note of this. So you can go for companies like I would say Grab, which has a moat. Uber, they have a moat as well. Uber Eats and Uber Rides. And then you got Google, which has their BART AI, as well as their Google Search, which has a moat, and their video content on YouTube as well, which is doing all right. So maybe not Tesla at the moment, or Rivian, even though some of the stocks are at all-time low. There could be more on downside as well. Companies that are heavily geared and need more capital, have debt, high debt, interest rates. Those companies are companies that you might want to avoid at the moment. So yeah, and as you can see, interest rates are going to be maintained higher for longer. There's no imminent sight of interest rates cuts in the near future. So yeah, so always look for any good companies that has a moat and has a monopoly power. So let me know in the comments if you find any companies that you feel there's a moat or something, and we can look at it together. And so thank you very much.